everyone. Welcome to KR University Dialogue. My name is Avinash, and I am a second year BCom honors student from School of Management and Commerce at KR University. Today, in this session of dialogue, we have Professor S.G. Badrinath sir with us. Badrinath sir is currently a visiting faculty, Canara Bank, chair in banking and finance, and also chair of the Center for Capital Markets and Risk Management at IIM-Bangalore. Sir has been a full-time professor at San Diego State University and has served on the faculties of Purdue University and Rutgers University. Sir has completed his PhD in finance from Canara Graduate School of Management, Purdue University, and also has a PGDM in finance from IIM-Bangalore. So has been involved into a lot of research work, and his work has been published and acknowledged by a lot of leading publications such as Journal of Finance, Journal of Financial Economics, etc. Sir has also served as a faculty advisor to ASDAC Equity Fund and Student Managed Portfolio. Welcome to KR Mangalam University Dialogue, sir.
Thank you very much, Avinash. I'm glad to be here. Hello, everyone.
Hello, sir. So we will begin with our today's session. My first question to you is, so right now there has been a lot of pandemic situation going on and people have been panicking a lot. So we have been talking a lot about embracing the new abnormal. So how resilient do you think is the current situation for an investor? And what will be your suggestion for a person who is into investment into share markets? How should a person plan and forecast his planning, keeping in mind the current situation?
That's a long question and will deserve an even longer answer, Avinash, right?
Right. Sir.
So I would like to break that up into thinking short term and into thinking long term.
Right.
And in the short term, if you think about how financial markets, not just in India, but all over the world have been doing, they are not really behaving as if there is a new abnormal. Okay, they seem to be behaving like, all right, pandemic came, pandemic ho gaya, economies are reopening, governments are printing money and providing stimulus. Things will come back to the old normal. That's kind of the way the markets are behaving. And I happen to think that that is wrong. I am no pandemic expert. I do not want to get into details about when, how long, who this pandemic is going to affect and all of that stuff. But, if I had to make an educated guess, despite what the daily news tells you, I don't think a vaccine is anywhere close to us. I don't think that second and third waves are not going to happen. They probably are. As the winter months come out in the West, things are likely to get much worse. So I don't think we are ready for a new normal, and that's in the near term, right? In the long term, and also if you look at markets and valuations and equity prices, since India's lockdown started in March, global markets have gone nothing but straight up. I was a happy buyer of stocks at the late part of March, but at current levels and valuations, I don't want to be in markets. I think that there is a lot of trading going on. There is a lot of short-term stuff going on. Having been a teacher for such a long time, I am reminded, I think in terms of one-liners for some reason. And the one-liner that comes to my mind is, for this current climate, is markets can stay irrational longer than you can stay solvent. Okay? So that's my kind of take on what's happening in the near term, right? Near term meaning 6 months, a year. But go ahead. You probably have other questions that I will answer instead of going on about this. Yeah.
So based on the first question you answered, I would like to know, keeping in mind the current situation, we can observe that developed nations like USA, UK have been facing a lot of problems regarding their economy. And when we talk about all these things, what according to you can be the macroeconomic factors that will affect the Indian economic market or Indian stock market currently?
I think, not just for India, but globally too, the International Monetary Fund, central banks around the world, everybody has been downgrading economies, downgrading markets, downgrading economic activity and economic growth, big time. And I think that is going to stay an issue. We are all staying at home now. Many of us have got very comfortable staying at home and nobody seems to even want to go to work anymore. Humans are very adaptive people, right? So
Yeah,
we are ready for the new normal, even if the market does not seem to be ready for it in some sense, right? But I think that, I'd like to talk, partly global, partly India too. Globally, the US can always print money and people are always, for whatever reason, willing to buy dollars. Stimuli of that macroeconomic sort in India are a lot harder to come by. Governments are standing ready to do whatever they can, and they have made promises to the public to do whatever they can. But the toolkit that is in the hands of governments in emerging markets is a lot more limited than the arsenal that some of the Western economies can bring to bear on this issue, right? I think that governments need to be thinking longer term. I think that here in India in particular, we need to be thinking about much more fundamental grassroots things. One of the things that all the stimulus and macroeconomic bump that people provide to economies is one of the fallouts of it is that there is increasing economic inequality. India is bad enough, but it's getting worse. And you guys all know, most of us come from fairly privileged backgrounds. We have people who come and work in our houses whenever the lockdowns allow them and the resident associations allow them. Think of those people for a second. I mean, their income levels have chopped 40–50%. Some of them have got fired. If there were 3 people working in a family, maybe 1 or 2 are working now. So those guys are taking a huge hit. Us privileged types can probably survive. Financial markets are going up. Who's benefiting from financial markets? Not those people who are working for you and me. The rich are the ones who are benefiting from it, right? So macroeconomically speaking, I mean, inequality issues are going to be really, really severe going forward. And people talk about it, but I don't know if there are any policies to address these things. Right, and that's going to be a big driver. We shouldn't worry about how much Hindustan Lever is going to sell or how many scooters and motorcycles Hero Honda is going to buy, but it's going to sell as well. But that's all going to depend on consumers make up a significant chunk of the economy, and if there's no money in their pockets, what are they going to buy? Right, policies that affect that is where I think the focus ought to really be more and more and more. Okay.
right, sir. Yeah. So, sir, you have been a professor for a very long time, and now you know how students perceive their future. So, according to you, for a aspiring student like me who is going to enter the market very soon in future, so what will be your suggestion? Like a post-pandemic, what should be my strategy entering the market? And students like me who are aspiring to enter the market very soon.
Okay, I think there are do's and don'ts that I have. And my do's and don'ts for this are really sort of pandemic independent.
Right.
Right. And, the pandemic is going to change the nature of work. There is going to be more work from home types of things happening, which is good in some ways for all of us, bad in some ways for others. Right. But given all of that, as a young person entering markets today, I mean, the biggest don't, and I tell this to all my students, both here at IIM and elsewhere, is, don't put stupid things on social media, silly little selfies of you doing something somewhere. And I'll tell you one reason why I say this a lot, and kids do this a lot. Everybody's always, now that you've got time on your hands, you're taking selfies left, right, and center. But there is a startup here in Bangalore that I was interacting with about a year ago. And the sole purpose of this startup was they were going to abolish the resume, the curriculum vitae. Okay, they were offering a service to potential employers, saying, just give us some statistics on this individual that you're considering for a job. We will go and on social media, and we have very highly developed software, and we will tell you if this guy is a good fit for the job or not. We don't even need his resume. So they're going to go scrape social media and try and figure out who you are, what you've been, what kind of stupid pictures of yourself you've put up, what kind of articles and stories that you've written to the world. And the employer will get to know all these things. So you can't hide from these people. So your biggest don't is going to be, your social media presence ought to be very, very careful.
Right, sir.
For one thing. Okay. And I hope you kids are doing it. I'm an old guy. Okay. My daughter, my nephews and nieces are a little careful. But, youth can only be careful so much. And after a point, you get a little crazy and say, Chodo yaar, I will put up this stupid picture of me with, my hands dangling from somewhere else, or me drinking something I shouldn't be drinking, or smoking something I shouldn't be smoking, right?
Right.
Don't is a very simple rule, right? The second one, which is second and third perhaps, which is more of a do, is, and I say this for India in particular, for emerging markets also specifically, and I see this after having come back to India after so many years spent in the West, and friends of mine who are captains of industry in India will say things like, we don't want to hire IIM-Bangalore students. They're very smart and all. They went to IIT, they went to IIM, they topped the CAT, they did whatever. Indian children are very good at passing exams, right? But their story was that we don't want to hire them because they don't know anything about the real world and we don't have the time to train them for it. Okay, so this also feeds up into the kinds of things that KRMU is trying to do as well in terms of projects and things, but we'll get to that in a little bit, right? So, but what I want to tell kids generally as a do is, and I'll try and sum it up for you, like I said in the beginning, I like one-liners. So one-liners kind of stick in people's minds, right? And so I tell all my students this too. And, one of the things we started at IIM, at the center that I no longer run, is we have a bunch of Bloomberg terminals. Okay, and Bloomberg terminals are basically, for those of you who may not know, it's like a data box with financial market data worldwide. And we integrated that Bloomberg terminal exposure into every financial class that the MBAs, our PGP students took. So they would start with an accounting class. We would say, okay, you pick a sector of an economy, you go and try and understand what the accounting variables for that sector look like. And you compare, whether it's financial ratios, profitability ratios, all the basic stuff that are accounting characteristics. Then you go to a finance class and you say, all right, for the same set of companies in that sector that you picked, you go look at things like dividend policy, capital structure policies, things of that sort. And then the third class they would come to would be my class, which was an investments class. And say, okay, now that you understand the accounting behind the company, now that you understand the cost of capital and financial structure of this company, value the bloody thing. Okay. And I would bring in my friends who are portfolio managers and say, okay, guys, I've got these young, bright MBAs that you want to hire. You have 5 minutes to make a pitch. You want to short a stock, buy a stock, long a stock, whatever it is. You have 5 minutes, you have 5 slides. No nakra of comprising 18 slides into 5 slides because everybody knows you do this anyway. Get to the point. These are busy people who are managing billions of rupees. Get to the point, give them a pitch. And that kind of hands-on thing is really now, the kids would never understand why I made them do this in the beginning. And I would go into class and I would say, boss, all the theory we teach you is wrong. Okay? Get your hands dirty. Until you do that, you're not going to learn anything. So that's kind of how that process started. But anyway, coming back to, so I went ahead a little bit. But coming back to the don't, and let me stop here and say this. As an employee, potential employee, make sure that you're careful about what you promise to deliver.
Right.
And equally importantly, deliver when you promise to deliver.
Right.
No nakra about grandfather died, grandmother died, traffic happened, power went off, computer failed, all these bloody excuses, mat karo. Employers want somebody they can rely on. Employers want somebody they can trust. Right. Employers, they don't want smart people. There are lots of smart people in this country who've taken lots of exams. But there are very few young people. And, we get into this habit as Indians. Yaar, choda yaar, baad mein kar lenge, 5 minute ke baad, 15 minute ke baad, kal kar denge. You don't want to do this on the job. If you say you will get something done at 9 o'clock Monday morning, you bloody well get it done. Even if you don't have to go to sleep all night, even if some other drama disaster happens. That is what is going to get you to keep your job. You promise what you can deliver, and you deliver what you have promised when you promised it.
Right, sir. I just noticed that we are running out of time. So let me ask you the last question. So, like you talked about the startup in Bangalore. So we at our university have also been taking a lot of projects as a part of our curriculum. So what do you think? How is this helping bridging the gap between academics and the industry that we young people strive for?
Okay, I think that Bloomberg story I told you partly sort of answered this question anyway.
Right.
But one thing I want to say as an educator for 30 years, okay, I think good theory is good practice.
Right.
The mindset amongst Indians, both faculty and students, is like theory is over here, practice is over here, and never the two shall meet. Okay, and there is a mindset that it really bothers me at the core of my intellectual personality. It's like, this is nonsense, okay? Who made this difference between theory and practice? It's completely artificial construct. Good theory is good practice. If it doesn't work, chuck it out, okay? And so with the Bloomberg stuff, as I was telling you, right? I can teach you theories of valuation. You know, one of my former classmates is this very famous finance fellow called Ashwath Damodaran, whose books you might have read. And his story is very similar. You know, he is very hands-on. He is very dynamic. It's like, if it doesn't work, we don't use it. But in India, people tend to teach theory, open your book and read page 55 and memorize the following 5 equations. That is bloody nonsense. Don't do this, people. If you're faculty listening to me, don't do this. But apply it, you know. So I love the KRMU model in the sense that you are actually getting kids to go out and get their hands dirty. You know, read a financial statement. Don't just look at some made up set of financial numbers. Read the footnotes to a financial statement. I'm a finance guy, so my examples are all finance examples, right? Nothing works according to theory. And you have to get to know this, and you'll never know it if you don't get your hands dirty. Okay? And therefore, projects and project-related education is probably the most valuable thing you can get out of an institution like KRMU.
Right, sir.
Yeah.
Yeah. Thank you so much, sir, for being part of our session. I really hope all the listeners who have been listening to you really enjoyed all this. And they
Thank you,
learned a
Avinash.
lot
I
from
want
you.
to put in a plug for myself if I can.
Yeah.
Since this was part of an investments thing, one of the, I probably talked about it when I was at KRMU last, but my center and IMB have created, joint with the National Stock Exchange, an investor education website. It's called pie.ccmrm.org. It's a free website. It's got everything you wanted to learn about markets. It's got interviews with academics, podcasts with practitioners. It's got 50 topics. It's got deep dives, and it's all free. So any of you interested in learning about markets, go check it out.
Thank you so much for the information, sir. I'll surely check it out as soon as possible. And I'd like to request all the viewers who have been seeing this to please check it out. It will be really helpful. Like somebody as experienced as you teaching all this stuff will be really helpful. Thanks for being part of this session, sir. I hope you really enjoyed and we did too. Thank you.